Good afternoon, everyone. It's Wednesday, the 24th of September. I thought today we'd have a look at some of the ASX gold stocks. I know they're very actively traded and a lot of people follow them. So one that I follow is Perseus Mining. Here's a weekly chart. You can see that it's come back and tested. Well, it's come back right to the low that it reached during the GFC in 2008. During the gold price plummet toward the end of last year. I guess that's not too dissimilar from a lot of the other gold stocks, but Perseus in itself, the last year, has also had a lot of operational problems. This is a daily chart. And you can see, the other thing to note was just an astronomical increase in volume in the last 2 or 3 years, showing how much of a trading plaything it's become for the investment banks. A lot of the banks have price targets of about 85 to a dollar, on 85 cents to a dollar on this, and it's since those targets have been around, it hasn't really got above 50 cents. So I think they're sort of pumping it a little bit, and then every time it reaches this sort of resistance zone, they're dumping it to the to individual shareholders. I think sometime last year when the other gold stocks were plummeting, Perseus had all these operational problems, and that was really these sort of volume spikes here and here in particular, and again here were due to operational issues. They're constantly downgrading production guidance, and that's really created this resistance zone. I think at the moment people are still very skeptical about them meeting their production forecasts and in particular their cost guidance, because they are very leveraged to the gold price. The move at the moment seems to be very similar to what we saw in April and May, and there's not, in that stage, there wasn't a lot of there wasn't a sharp spike, and that sort of shows the skepticism, I think, and it really it took some drilling results to really kick along the share price a little bit before that dumping action again here. So I think there's a bit of an opportunity here to wait before the next quarterly, which I expect to be quite a bit better. The CEO did do a presentation and said that they've already exceeded their production forecast, and their cost guidance is about $100 or $200 an ounce under guidance. So there are signs of improvement at the mine, and they have got quite a bit of cash in the bank. Another chart, another gold stock, Northern Star Resources, one of the biggest gold stocks on the ASX nowadays. This is a weekly chart. This is sort of one that got away from me. I first heard about this about 3 years ago when it was sort of 40 or 50 cents, and since then it's really knocked the lights out with its operational performance. And then obviously in the last 6 months to a year, people are familiar with this stock will know that they've been really aggressive in acquisitions of other mines in Western Australia, when a lot of the major gold producers that have been getting out and selling their operations. So that's really been responsible for this massive run up, especially relative to the other gold stocks, from 70 cents to $1.90 only a few weeks ago. Since then, it's really plummeted the last couple of weeks on no real reason other than the fall in the gold price, which has been alleviated somewhat by the fall in the Australian dollar. So I think it's been fairly harshly dealt with, although it was a fairly large run up that it had here, and it was heavily overbought here. So I was thinking it was due for a fall. I did get in the other day at $1.23. So I'm hoping that this sort of resistance zone, this sort of support zone around this level, which is a fairly sort of, this zone around here, I guess you could say, will act as a support zone, and it'll spike back up. This heavy volume the other day, I think, was related to some sort of ASX rebalancing effect last Friday. So it's not necessarily representative of true volume, but there's definitely been some buyers coming in the last few days. You can see that the volume's definitely up on the averages. Another one of the most actively traded gold stocks in the ASX is Bedell Resources. This is a weekly chart. You can see they're trading at well, 4-year lows now. Actually, last year they were one of the better performers among the gold stocks, primarily due to a high-grade pit that they had. I think there was hopes that they'd be able to continue that, keep finding high-grade resources. But I think the reality sort of started to set in on this down move here, and that they're not likely to replenish those resources to anything like the same extent. So you can see that it's this range here is almost played out, but it seems to be on a sort of a never-ending slide here. It is heavily shorted, one of the most heavily shorted gold stocks, I think. But like a lot of shorting activity, there is a reason it's heavily shorted, and that's because there's, I think the market's very skeptical about whether or not it's able to keep its costs down. The last quarterly was very, very average, which I think was about in this sort of down move here. Their costs are up around $1,200 an ounce or more. I think due to flooding at the mine or just heavy rainfall. This quarter they're suggesting they're going to be a lot of better production figures and a lot lower costs, but the market seems pretty skeptical of that at the moment.